Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD extended the losses yesterday following dovish comments from Fed's Kashkari, as he basically got in line with other members for a rate cut in September. This change of heart was triggered by the softer than expected NFP report last Friday. Overall, the data wasn't as bad as one might think by just looking at the reaction, but given that we were positioned for a strong report and the pricing got more hawkish after the Fed's decision, the weaker data was enough to trigger a quick repricing. In fact, the market is now pricing 60 bps of easing by year end, compared to just 35 bps before the NFP release. It's highly likely that more benign data will see Fetcher Powell opening the door for a cut in September at the Jackson Hole Symposium. Nonetheless, the ISM Services PMI this week showed a new high in the prices index, and the US jobless claims today could trigger a rethink on the actual softness of the labor market in case we get strong data. Of course, weak figures will just solidify markets' expectations and weigh on the greenback further. On the JPY side, we haven't got anything new since the BOJ left interest rates unchanged and revised inflation forecast higher as expected at the last meeting. The yen, after some depreciation caused by dovish Governor Weda's comments, rallied strongly on the back of the soft NFP report and the dovish repricing for the Fed. For more JPY appreciation, we will need weak US data to increase the dovish bets on the Fed, or higher inflation figures for Japan to price in more rate hikes than currently expected. Other potential positive driver could be signs of more fiscal support, as that will likely put upward pressure on inflation. Now on the daily chart, we can see that USDJPY continues to edge lower after the big sell-off from the 151 handle triggered by the soft NFP report. The target for the sellers should be this major upward trend line around the 144.50 level. That's where we can expect the buyers to step in with a defined risk below the trend line to position for a rally back into the resistance. On the 4-hour chart, we can see that eventually the price pulled back into this broken trend line where the sellers piled in with a defined risk above it to position for the continuation of the downtrend. The buyers will likely wait for the price to come into this 146 handle before stepping in for a rally back into the 151 handle. On the 1 hour chart, on the 1 hour chart, we can see that the price is now running to the downside, and from a risk management perspective, it's hardly ever a good idea chasing the move without a catalyst. Therefore, the buyers will be better off to wait for the price to come into the 146 handle, while the sellers will look for a break below that level to increase the bearish bets into new lows. These red lines define the average daily range for today. For the upcoming catalysts, today we get the latest US jobless claims figures.